Well, hello guys. Here we are back again. Another trade, another day. Today is Monday, December 19. And then here's another trade that I'm shorting right now. Um, just a minute or two before the opening of the market, the US session. This is NASDAQ 2-minute chart. And I entered around the area of 11,340 and I place my another order contract a little bit if the market leave the market room to go all the way up as the opening, take our order and then move all the way down to where I set my stop loss. I'm not always like to trade around this area, but sometimes when I find an opportunity, I like to seize it. This is what happened. It's not the right best entry price, but still it can be manageable and valid trade. There you go. So now it is the opening, this is the candle of the opening, and so the market is going to that direction. Of course, it's bouncing back around this the SMA 200, so of course expecting the market will bounce back. But this is trace my my Fibonacci, so the market show a little bit a reverse all the way to the 50% of the Fibonacci and down, going down. This is what make a signal for me to enter and enter safely. So let's see. So now it's going against us for a little bit of time. Let's see if we're gonna take our order and then trade and have a trade with two contracts. Even though I'm not the best advocate of a lot of contracts, especially on Monday. You don't want 2, 3, 4, 5 contracts. Depends, what your style, who you are, what kind of, how many years of experience, and then what is your psychology. I mean, always boils down to the personality. Trading CS, there's a lot of strategies, a lot of rules, but you choose the ones that's most suitable to your personality in the end of the day. So there be no contradiction with you belief, internal belief, and psychology, and so on. So you see what happened now. Okay. So the market is acting irrationally. So there you go. So this is the push sometimes because the market doesn't know which direction gonna take. There's a lot of orders, there's a lot of imbalance at the time. So the market hit this order, take them, and then execute them. This is what creates this imbalance. So here's this candle where it created this beautiful wick, or a beautiful wick. Yes, this is gonna take our second contract. Let's do that. Almost. Let's do it, baby. Wow. Didn't want Soviets. So there you go. So market going to the direction that we expected him to go. I'll explain why this area. I set my stop loss right there in this area of where the markets were expecting it to reach. I will explain that in a second. You see right there, so the market give us $500 profit right there, which is good. I will explain right now because this is the area. So well, okay, $500 profit, good. So this area of a gap that got the market created the opening. So right there in the 5-minute chart, so the market reached that area, and then you can see the RSI and the volume. So now what happened is the market's either gonna go all the way down to whatever. I will place a line and it will show why I'm expecting the market to go all the way down more than that. Because first, what happened is the market created a cabinet opening. So, and then it covered around 60% of this area it covers and went all the way up. So now expecting to go all the way down, cover all this gap back again, and then go all the way down to those two levels of Bollinger Band So this is why I put my Bollinger Band is to use this curve as a footprint. So as a target, so this area became the area of the target, and then it's turned to be a resistance. So this area was the market open and create a gap for those people who are familiar with stock market or penny stocks. As I used to be a penny stock trader, so is the market was I was developing a strategy with the market. Anytime it on the opening create that's a gap, usually it end up covering all the gap, whether it's same day or next day. But now, since it is a small time frame, it's gonna be covered for the first, in the same day, right? So this happen at the opening, so the Asian session, and then after that the European session, then the US session. Of course, the US session, as strong it is, will definitely push the price all the way to cover the gap, and then generate liquidity in order to aim high, or to change the trend. This is what happened. So now where I placed my line right there, so for me is another opportunity. Why not? Thinking about it right now and see what's see the confirmation, what the market will show. If I have more confirmation in my favor, definitely I will take another trend. Let's see. But for now, we'll see how the market reacts around those areas. That's awesome. This is good. This is good. And now I start to like it. Yes, it is exactly this area of this Bollinger Band. So there is high chances that the market will reverse and take a little small, there you go, take a small trade as a scalp. Let's do a quick scalp right there. Maybe one contract. Yes, a little bit more. Yes, I like the excess. When the market shows the excess, at that time, I like to enter. When the excess of the price reached that area, then that's it. So you can see it's losing the momentum. That's when you want to come and take the trade as a rally now, as is it facing the downtrend, or if it was like an uptrend, would be the pullback. So we come and take that little bit of profit in the pullback. Oh, actually I took two trades, two contracts. That's awesome. So I went in aggressive in the two contract. Again, tracing the Fibonacci and the different charts, and then reach, I like to aim the 25%. So those numbers are in our favor. So there's a high chance of the market will reach the 25%. Less chance the market will reach the 38% of the Fibonacci, and then less chance the market reach the 50%. But depends, a lot of things. But now when it's just the opening Monday and the market is undecided still what direction you might gonna push more down, you don't want to go crazy and aim high for that. Just aim just a small profit, and then that's it. So we aim for that. I aim for 25%. I might now need to adjust my my target a little bit, adjust a little bit down, and then let the market reach it safely. So this candle right here, this is the candle I'm expecting will direct the market in our direction. There you go. This is a good candle. So if there is gonna yes, right there, so 25%. So is the candle gonna cover on anybody the previous one? Let's see. Again, we never place our confirmation base and a non-closing candle. Always is the closing candle, then we place our conclusion. So let's see what's happening with this. The third candle just open. I'm expecting this candle will touch our target and will close our trade with profit, and this is what happened. There you go, $1,000 profit for both trades, 2 winning trades in a matter of 10 minutes at the opening, starting the opening to not even to the first quarter of the openings of we're still at the 15-minute candle. So there you go, guys. Thank you very much for watching. If you find value in this video, please consider commenting, subscribing, liking. Let me know what you want me to share with you guys. Hit me up. I'm here to answer your questions. Until then, guys, remember to always trade wisely. Talk to you later. Bye for now.